This is the Precious Metals Briefing with Jerry Williams. Safeguard your money.
Welcome to another edition of the Precious Metals Briefing. I'm Tony Famino here again with Jerry Williams, the founder and vice president of American Precious Metals in Arizona. And today we're going to discover how precious metals investing and other investing even will be impacted by the upcoming elections. We have Dennis Gartman on, and he is the former editor of the Gartman letter, the chair of the University of Akron's Endowment Committee, and on the board of directors for the North Carolina State University Endowment. And Jerry, this is going to be fun because Dennis has got a wealth of information and experience, and he certainly has a lot of wealth and experience in precious metals investing too. So this should be a good show.
Yes, looking forward to it. And thank you, Dennis, for taking the time. First, I would want to say I missed that letter. I had a bootleg subscription through my brother-in-law, so we've been reading it for years. And anyway, we do miss it.
Yeah, it was great, good fun doing it for 35 years, but I don't miss getting up at 1 o'clock in the morning and trying to knock out 8 or 9 pages of cogent and sometimes hopefully humorous material on the capital markets. Now I only get up at 3:30 in the morning to watch what the markets are doing instead of getting up at 1. So I don't miss that much at all.
Well, good. I'm glad you're still in the business anyway.
Yeah.
But my first question, and one that my brother-in-law wanted to ask too, is given the responsibilities, the size of responsibilities you have, what worries you the most right now?
That's a really good question. There are a lot of things that worry me most, to be quite honest. I'm worried, obviously, about the presidential election. I will vote for Mr. Trump, but he's his own worst enemy, and I'm fearful that we may have a landslide for Mr. Biden. It shouldn't be that way, but I'm fearful that it's going to happen, and that will be terribly deleterious to economic activity in the United States as far as I'm concerned. So that bothers me greatly. The virus bothers me not nearly as much as it bothers other people, but it is of concern, and one can only hope that we don't get a second wave here in the United States during the wintertime, but probably we shall. That bothers me. I'm bothered by what China continues to do geopolitically around the world. Its mischief in the South China Sea is bothersome. Its activities in the Indian Ocean and having a military base in Djibouti, that bothers me. I'm bothered by the North Koreans. That bothers me. So there are a lot of things that keep me awake at night. And then I'm bothered by the fact that we're having, this will sound very esoteric and completely off the cuff, but we're having a minimum as far as sunlight is concerned, or as far as solar storms are concerned, and that leads me to believe that we're going to have rather more volatile weather going forward in the next several years, and could have a very cold winter, and that'll be deleterious to agriculture around the world. I think that bothers me too. So there are a number of things that bother me. I can't say any one thing bothers me a lot. I just wake up and wonder, is today going to be any better than yesterday was?
I was watching your performance on television earlier this week. I think it was Monday, wasn't it, Barney?
Yeah.
And they didn't give me really much time, and I don't know if he asked this or not, but obviously, what sort of factors influenced your decision to recommend precious metals? One thing, I think he said somewhere between 10 and 25%.
Oh yeah, I think everybody should own at least 5% and maybe 10%. And I was taking some issue with one of the larger hedge fund managers who said that he thinks everybody should own 25%. I think that's a bit over the top. That's probably a bit too much. I won't take my own beyond 10 or 15 or 20% at this point. But I've been bullish of the precious metals and been bullish of gold for the simple reason that I think that, one, geopolitics are confused, two, domestic politics are confused, and three, the monetary authorities, and perhaps most importantly, the monetary authorities around the world in the industrialized nations are all expansionary as far as monetary policy is concerned. The Fed is expanding its supply reserves. The Bank of Canada is expanding its supply reserves. The ECB is doing the same thing. The Bank of China is doing the same thing. The Russian central bank is doing the same thing. I'm not sure that there's any one central bank in the world that is not becoming expansionary. And eventually, and the operative word here being eventually that shall be inflationary, both domestically and internationally. So as long as that continues, and I see no reason to think that that's going to change anytime soon, it's been extant for the past several years, and the Fed has made it abundantly clear that it wants to get inflation well above 2%. And in order to get 2% inflation on average, which is now what Mr. Powell has said he wants to have, you're going to have 3 or 4% inflation for the next 2 or 3 years, and that's going to be supportive of gold prices. So I've been bullish of gold for the past several years, and I'm not a gold bug. I want to make sure people understand that fact. I'm not always bullish of gold. There are times when one is to be bearish. There are times when one is to be neutral of gold, but this is one of those times when one is to be bullish. So I think everybody should own at least 5%, maybe up to 10%, but I think 25% of one's portfolio is probably aggressively too much gold. But I am bullish of gold, and it seems to be moving from the lower left to the upper right on a rather consistent and continual basis.
Would that be physical gold or shares or both?
I think you should own some physical gold, but it's hard to. The problem with physical gold is storing it. I think everybody should own a little bit of physical gold, but I think the best way to own gold, as far as as far as trying to hedge one's risks geopolitically and domestically politically, are the ETFs and the gold miner shares, and especially the larger gold miner shares. I never go out and talk about the small miners. There's just too much a cacophony of noise that exists in the small miners. So I usually use the ETFs, GLD and CEF. CEF gives you exposure to gold and to silver at the same time. So those, I think, one should own a few percentage of gold in real terms, in gold coin terms, or in bullion terms. But the majority of what you should own, I think, is in the terms of gold ETFs. And as I said, GLD and CEF are the ones that make the most sense to me.
That's good information. One other thing, while we're on that subject, most of our clients are really, about half our volume of business actually is in silver. Do you have any thoughts or recommendations on whether one should own silver, or maybe how much?
Well, first of all, let's talk about the fact that the gold-silver ratio is such that silver is undervalued relative to gold. No question about it. The gold-silver ratio should be closer to 20 or 25, and now it's 40 or 45, and it was almost at 100. It took 100 ounces of gold to buy 100 ounces of silver to buy an ounce of gold. So silver seems to me to be relatively undervalued relative to gold. That said, you would think that would mean that I'd be far more amenable to the silver market than I am to the gold market. And quite honestly, at 70 years old, I'm not willing to take the risk of the volatility of the silver market. Silver moves 1 or 2 or 3% in a day on a rather consistent basis. That just scares here's a very, very esoteric and very important economic term, that scares the bejeepers out of me. And I'd prefer owning, I just find gold a far more amenable, far more reasonable, far less volatile environment than I do the silver market. But again, looking historically, and I mean historically over decades, over 100 years or more, the gold-silver ratio is such that silver is relatively undervalued relative to gold. So I can understand why people would rather own silver. I can make the sense of it. I just don't like the volatility of silver. It just scares too much. It just scares me too much.
I'm sure, Dennis, you're familiar with Harry Brown.
Yes.
Former libertarian candidate for president, and so on. Anyway, he's a mentor to many of us who've been in the business a long time, since 1972, like myself. He had something he called a permanent portfolio, which was 25% gold, 25% stocks, 25% treasuries, and 25% cash. He figured that would get you through just about any sort of crisis. You would never lose the whole wad. And I just heard a fellow, I think you quoted him too, Gundlach, the billionaire who has 25%. Yeah. So when you mentioned 25% was too heavy, what is the rest of your portfolio in?
Well, I own a bunch of bond funds, ETFs, that pay monthly dividends, and some of them are so the dividends are well covered. They pay you monthly on a very consistent basis, and if you can get 7, 8, 9, 10% that is paid to you in monthly terms, it adds up over time. So a goodly portion of what I have, given the fact that I'm 70 years old and retired, I'm looking for income. So I have a lot of bond funds that have been quiet, doing nothing over the course of the past 6 or 7 months, and I'm comfortable with something that moves quietly and pays me monthly dividends. I like those. So the majority of what I have is in bond funds. Next, I own gold, GLD, and CEF. Without looking too closely, I think I've got 15% of what I have is in GLD or CEF, and I'm comfortable with that. I've got some gold bullion, some coins, and I own a few technology stocks that pay me dividends. I like technology. Obviously, everybody else does too, but I like the technology stocks, especially the old line technology stocks that pay me reasonable dividends. And I own a few oil companies. So I'm not quite 25, 25, 25, 25. Probably a little less in the gold market, a little more in the bond market, and a little less in stocks. But not that far from the 25, 25, 25, 25. Harry, I hadn't heard that before, and I rather like that. That makes eminent good sense. As Mr. Brown said, you'll probably not get wiped out.
Well, yeah, that's a good segue to my next question, too, which is what are your thoughts on the amount of worldwide debt? No one ever talks about that very much.
Well, I've been in the business since 1974. You were 2 years less than you have been, and they've told me in the early 1970s, they told me the United States had too much debt and it couldn't continue. They told me in the 1980s that the United States has too much debt and it couldn't continue. They told me in the 1990s that the United States has too much debt and it couldn't continue. They told me at the turn of the century that the United States has too much debt and it couldn't continue. In 2010, they told me the United States has too much debt and it can't continue. And in 2020, they tell me the United States has too much debt and it can't continue. Here we are, almost 50 years later, and the game hasn't changed, and interest rates are actually down, not up, over the course of the last 25 and 30 years. So I don't really lie awake at night worrying about the debt of the United States as everybody else seems to worry about it. There shall come a time when it will be deleterious. There shall come a time when the markets will say enough is enough, and a tragedy occurs. But that time has been, I've been told every decade that it can't continue, and that the end is imminent, and the end doesn't seem to be imminent any more than it was 50 years ago. So I don't lie awake at night worrying that much about the United States' heavy debt. There shall come a time when it is problematic. That time may be tomorrow. It may be 50 years from now. It may be a decade from now. It'll be here when it comes. We'll know it when it happens. Until then, I don't worry about it. I know that sounds unusual. I know that sounds atypical, and it probably will make some people who listen to this howl with derisive laughter, but that's the reality. I don't worry about it that much.
Well, I'm just remembering what Donald Reagan, who was the Treasury Secretary under Reagan, said way back in 1986 or something like that. He said deficits don't matter. And they proceeded to run up huge deficits, and we didn't have runaway inflation. We didn't have a collapse either. So, yeah, you're right.
And we had interest rates go from where when Reagan was the Treasury Secretary, the long bond had a 14.25% coupon. The long bond now has a 1.5% coupon. So even during all that period of time, despite the fact the budget deficit has exploded, despite the fact that budget deficits on an annual basis get larger and larger, despite the fact that the amount of overall debt has risen astronomically, interest rates have gone down, the economy has been strong, and the population is reasonably happy, except for COVID. So worrying about it has been a worry that probably should have been not worried about. I know that sounds strange, but that's the harsh reality of the circumstance. Or actually, I should say the harsh reality. That's the pleasant reality of the circumstance.
Right. Well, with the election coming up here in just a few weeks, what do you think might happen to the stock market if the socialists win?
One would think that if the socialists win, that the stock market will go down and go down hard. But you know what's interesting? What have been the two strongest stock markets in the world in the course of the last 2 years? And this will shock people: Venezuela and Zimbabwe, two strongest stock markets in the world. Now it's because their currencies have gone almost to zero, but it was the place where money went and sought release. It sought safety in domestically in those two markets. If you were an American and you bought Venezuelan stocks, you got hurt because the currency just devalued by 99.9%, but the stock market went up almost a trillion percent. It's just been astonishing. So that's what happens when socialists get in power. They abrogate their responsibilities to fiscal policy and to monetary policy, and stock prices actually go higher. It's hard to believe, but that's what happens. So when the socialists take over, it will diminish the value of the dollar. It will raise the value of gold, but it may well raise the value of stock prices. So the real trade is own gold and stocks. Normally they move in contravention to one another, but if the socialists take over, and let's call it the socialists, that's what they are, if the socialists take over, I can make you the case that stocks and gold both go up.
Well, that takes care of my next question. That was what was happening to precious metals, but you've pretty much answered that, which is, I guess, why you have a position in them.
As long as the socialists do win, and it does appear that that's what's going to happen, unless Mr. Trump does something unusual and adopts a more mature attitude in the next debate, and let us hope that he does. But if the socialists, if the Democratic left takes over, the one thing you can rest assured is they will make sure that the monetary authorities are as expansionary, if not more expansionary, than they have been thus far. And clearly there will be fiscally expansionary. That's got to be inflationary. And if that's what's happening, as I just said, it'll be beneficial to gold prices. It'll be beneficial to stock prices. Hard for people to believe, but that's probably what shall happen.
Do you have any faith in these polls that show this huge lead for Biden? I just find that so hard to believe.
The most interesting poll I've seen, I do find it hard to believe, and the number of hidden Trump voters is probably 5 or 6 or 7 or 8%. But there was an interesting poll. I think I was listening to a pundit the other day while driving my car back from a doctor's appointment, that the Gallup poll, a recent Gallup poll came out, which showed that the people, when asked who are they going to vote for, it was 55-45 for Biden. But when they were asked who is your neighbor, who do you think your neighbor is going to vote for, it was 65% said they think their neighbor is going to vote for Trump. That's interesting. That's the way you can explain to a pollster who you might not want to tell them that you're voting for Trump because you think you might get ostracized, you might get attacked. You can actually express that opinion by saying, well, I think my neighbor is going to vote for Trump. So that I thought was fascinating. And I think it might be that same sort of poll came out in 2016 with almost the exact same numbers. So the election may be closer than we think.
Well, I think you're right. I've never been polled, actually, and if I did get called, I probably wouldn't respond anyway. But I don't know very many people who have been polled. So who are they talking to? I wonder.
My wife says the same thing. We were talking about that last night at dinner. That who are the pollsters and what do they do? And I will give them credit for trying hard to revamp after their rather surprisingly stupid polling in 2016 and how bad it was and how far off they were. They've tried their best to become more to be more factual, but I think the number of hidden, for lack of a better term, the number of hidden Trump voters is probably several percent that just don't get picked up. We'll see. And again,
right.
I don't really care what the popular vote is. All I really care about, and all anybody else should care about, is what the Electoral College vote will be, and that will probably be far closer than the polls would indicate at this point.
Well, our business is cash and carry physical. We don't do anything in securities. And business has been very quiet here now for a couple of weeks. We're getting equal amounts of buying and selling, and gold has been stuck, as you know, around 1,900, give or take $50, since the high in August at 2,070. I think that everyone's just waiting here to decide whether to buy or sell for the outcome of the election, to decide which way to go.
Oh, I don't doubt that for a minute. I think as I've always said in interviews, all economics is a study of people's propensity to take action, whether you're a businessman taking action to expand or contract your business, or whether it's an individual, what's their propensity to expand or contract their exposure to equities, debt, or precious metals. And I think that everybody's propensity has been to get smaller, less involved, and quiet, awaiting the results of the election. After the election, the game changes rather dramatically. After the election, the uncertainty of the election itself is resolved. Hopefully, it'll be resolved sometime before the end of November. I mean, there's all kinds of questions about the voting capabilities and ballots at all. We all know that. Everybody's heard that story to the nth degree. But once the election is resolved, and it has to be resolved by December 12th, I think, is the day that the Electoral College votes have to be cast. Once that's done, then I think people's propensity to become more involved in equities, become more involved in debt, become more involved in commodities, become more involved in gold shall rise dramatically.
I agree. And what about the vaccine? If that comes out, regardless of the election, that's going to be a factor as well, isn't it?
Oh, not a question. The advancements that have occurred in the last 6 and 7 and 8 months since the start of the virus, with therapeutics and vaccination circumstances, the numbers of companies, the numbers of universities, the numbers of PhDs and MDs who have been working on a vaccine and therapeutics is astonishing. And we'll have a vaccine, and the big question will be, how many will we have, and how well will we be able to get it to vast numbers of people? I mean, there are 7 billion people in the world, and you're going to have to vaccinate probably at least 60% of them to make sure that this horrible virus is distended. But we'll get there. It's just a matter of time, and probably will happen before the middle of next year for certain, and maybe as early as the first quarter of next year, which will resolve a lot of problems and at least take a lot of disconcertion out of the atmosphere. people are concerned. People are unhappy. People are disconcerted. People are fearful, and we need to get that fear put aside. We will. I'm an optimist in that instance.
Well, let me put you on the spot here. This may be out of your area of expertise, but one of the things that we have been concerned about over at least the last 10 years, and certainly in the last couple of months, is this scandal involving market manipulation, particularly in the precious metals. J.P. Morgan has paid nearly a $1 billion fine for excesses in market manipulation that occurred between 2013 and 2018, where they do something called spoofing. They put spurious false trades into the market to influence the other side to taking action one way or the other, which of course is illegal. They pay the fine, but it's probably a token compared to what they make on these illegal gains. Are you familiar with any of that sort of thing? And like J.P. Morgan, for example, has a huge physical position based on their inheriting Bear Stearns' short position in the '08 crisis. Is that anything you know about?
Well, first of all, I was a member of the Chicago Board of Trade and a floor trader. And heck, we used to spoof all the time. If you wanted to buy something at 6, you started to sell it at 7 to see if you could get anybody else to sell it at 6. You spoofed the market all the time. I'm not one that worries too much about spoofing. I was actually rather surprised when J.P. Morgan agreed to pay the fine. If somebody is putting orders into the market to buy or sell, that to me that adds liquidity at all times. So I'll take the other side of the issue. I'm not that demoralized or that concerned about the spoofing question. Do I think that there is manipulation at times? Of course there is. But when you manipulate something downward, you have to be able to buy it back, which means you have to manipulate it upward to get out of your trade. If you're trying to manipulate something upward, and you had to buy something to do it, eventually you have to be a seller to get your money out, and you're going to put the market down. So I don't get as upset as the folks at GATA and other places about market manipulation. Yes, there are times when markets are manipulated, but on balance, going historically, I think markets do a pretty good job. So, and I'm sure that you're going to get a lot of people saying Gartman doesn't know what he's talking about, and they're going to get very upset about it. But I don't lose sleep over over circumstances regarding market manipulation. There are other things to be concerned about than that.
What do you think happens to precious metals if Trump wins?
The most important question involved here is, it's not who is the resident of the White House, but who is the resident of the Federal Reserve Bank, and that's not going to change. So my response to that question is, as long as Mr. Powell remains at the Fed, that's probably going to be expansionary monetary policy going forward, and that will be supportive of gold prices. Mr. Trump will be less amenable to massive fiscal stimulus than would the Democrats, a Democratic administration. So you remove a little bit of that bullishness from the gold market with a Trump victory, but it's still going to be supportive of gold because, as I said, it's the resident of the Fed rather than the resident of the White House that is most important, both to stock prices and to gold values.
Well, Dennis, thank you again. It's been a very good pleasure talking to you. And I just want to wrap up today's comment, like I always do, with the words from the Wizard of Id: "He who has the gold makes the rules."
You've been listening to the Precious Metals Briefing with Jerry Williams. To learn more about safeguarding your money, go to apmaz.com or call 800-522-GOLD.